As you know, Term Plus recently came on as a platinum sponsor of Rask podcasts, and I invested a small amount myself, $2,000 to be exact, to get a feel for it. After all, I couldn't tell you to consider it if I hadn't at least considered it myself. And the result is it's a very, very good platform. It's potentially the simplest technology platform that I've come across in Australian finance. And what makes that extra special is, behind the scenes, something very sophisticated is actually happening. Term Plus is investing your capital in a globally diversified and professionally constructed portfolio of private credit designed to produce attractive and reliable monthly income. Aside from providing passive income, what really attracted me to partnering with Term Plus now is potentially falling interest rates. Because Term Plus starts by targeting 3% returns above the RBA cash rate for a 1-year fixed term account, there's a buffer in place even as interest rates fall. Monthly income can also be paid directly into your bank account or reinvested for compound returns. I see Term Plus as a really neatly packaged way for retirees or even accumulators like me to get exposure to professionally constructed global private credit portfolios. You can find out much more information and grab a hold of the PDS and TMD at termplus.com.au. If you want to just check out the website, you should also know that there's an instant chat function for questions, which is really important and I find really handy before I invest in anything. Don't forget to tell them Rask sent you. And as always, consult a licensed and trusted financial planner who can take into account your financial goals, needs, and risk appetite before investing. Drew Meredith, how you doing?
Incredible.
Yeah.
Hair's blown back over my head.
Has it?
No.
Oh. So you're looking well though.
Doing my best.
Where have you been?
There's stripes. They say stripes are thinning, particularly on camera, which has 10 pounds, whatever a pound is.
Yeah. Okay. That makes sense.
Going with the stripes today.
Yeah. You got your new Apple Watch Titanium Ultra on there?
No, that's the previous one. It's not the new one.
Oh, right.
You don't have to have all the new things. We do have the Pro Max, the new 17 though.
The iPhone?
Yeah.
Is that any good?
It's quite good. The weird thing was, as soon as I got it, I put it in my bag and I thought the camera had cracked on the back. It turns out Telstra automatically put a cover on the back of the phones as soon as you get them, so it was fine.
Oh, really?
The last thing you want to do is get a phone from Telstra and then have to return it in some way within like 2 days of getting it.
Yeah, cool. I noticed that you put you're one of those people that put like your little credit cards and stuff.
Never done it before, but
really?
New. Yep, got it now. There you go.
So do you carry a wallet with you or do you just have a phone with all the cards on it?
No, so I'm someone, and this is probably something you shouldn't say as a financial advisor. I reckon I could count 13 different marquees at home. And they're $10 each. So I've wasted a lot of money on marquees. So I always leave a card here, never carry a wallet properly, carry a wallet in my bag. So this one, 3 things you need: a marquee, 2 credit cards, done.
So for folks that aren't from Victoria, marquee's our system.
Yeah. You can't use, not yet, you can't use Apple Pay on a marquee, apparently, on our public transport system in Victoria.
And for people in Sydney or elsewhere where you can actually just tap your credit card as you walk through, you can't do that here either.
Not yet.
And if the only way that you can get on Victorian public transport with an app is via Android, if you use an Apple phone.
Like the vast majority of Australians, yep.
Yeah. So it's a bit of a joke, but they are coming.
This is connected
I have the inside
to
world that in Victoria they've
got the new machines.
The technology is already here.
Believe it when I see it.
Roll it out. Actually, speaking of, we're in early this morning, recording Wednesday morning early before work hours. And I normally get into the office at like 6 or 7, maybe say 7. 6 or 7. And
that'll get us the algorithm on YouTube.
Yeah. I went to there's 2, so obviously Melbourne's infrastructure is still catching up because the city's the fastest growing in the country and it's going to be the biggest. It already is the biggest city, but it's going to be far bigger in the next 10 or 20 years. But
Town Hall Station?
Yeah, so the new stations have opened here in Victoria, the new big inner city stations. And I know some of the engineers that were working on it, and they were like, you need to go down and check it out. They're actually amazing. Like internationally, like that'd even be considered amazing. So I went to go down it this morning and it said, classic Melbourne, it's like, platform doesn't open till 9:30. I'm like, what about people that need it? Like in the morning. So
it's not a commuting platform.
No, it's just
a leisure platform.
Just a station that's just a tourist attraction. So
That was
yeah,
a good station though.
well, I don't know.
Oh, you can't even get into the stairs.
You can't even get in there
9:30.
until
Right.
it's like a viewing hour or something. Anyway, but apparently they got overwhelmed because people just rushed there on the weekend to check out all the new stations and underground facilities and stuff because it's all connected underground, kind of like the London Metro.
Yeah.
For people that aren't familiar, it's like there's like tunnels that connect the big stations now, which is pretty amazing when you think about it. A few years in the making,
In
whole
this day
new
and age.
lines going through the city and stuff. So pretty cool, and it's what our country needs to facilitate the population growth. So yeah, that's been my week. I noticed that you have also been doing some transport recently.
I have already met some clients in Perth last week, new and existing. Some catch-ups. The weather over there is significantly better than here.
Yes.
Maybe this week we'll match it. Who knows? But I thought if I'm interested, we got the Prado. I'm worried about the cost of petrol for my other car, so I thought let's rent a Tesla for a few days.
Wow.
Yeah.
Tesla.
Yeah.
Really? What are the chances?
That's why my hair's blown back.
Yeah,
It's
that's
kinda
it. Yeah.
not that it
Wow.
moves anymore.
It's a rocket ship, bro. How'd you go?
It was. I mean, I really enjoyed it.
Yeah.
It was quite a. You do have to get used to the new way of driving, like the acceleration, the slowdown.
Yeah.
And I'm known to be a bit of a touchy breaker, so it did help a lot with my consistency of driving.
Yeah.
But I'd almost say I'm all in. I need to
get one.
restructure a few things and then look at getting into that Tesla.
So yeah, people that don't drive
Yeah.
like an electric vehicle or whatever, mainly Teslas because they're more sensitive than the others, but you take your foot off the accelerator and it brakes.
Yeah.
Because it's got the most powerful regenerative braking.
Yeah. So you
far better than any other EVs.
It was not, and the hotel was charging it for me when we dropped it off too, so it was fantastic.
Yeah, perfect. A lot of the hotels do that, and a lot of the wineries, if you're so inclined, the wineries now will want to attract electric vehicle drivers, so they'll put charging stations out in the vineyards and stuff, so you can go and park your car and charge it. Yeah, I think remember that whole thing that people used to talk about, range anxiety?
Yeah.
Where you run out of battery? Like, I don't know anyone that had petrol anxiety. Imagine if you have a petrol station at your house.
Yeah.
That is what people had been
dealt with it.
People had been like, yeah, anyway, it's a whole thing.
I think I see it as a town, like a city car. Commuting in that makes complete sense. You charge it overnight. You only need 50 kilometers to go backwards and forwards. It regenerates because you're braking all the time in Melbourne traffic anyway.
Yeah, true. The new shout out to the new Model 3 Tesla. Actually, even not without, so it's the more cheaper one without the dual engine.
Yeah.
Goes 750 Ks just on standard charge.
This one only had 400. I might do a deep dive on salary packaging or
salary packaging. We should, because
the
it makes
FBT on
sense.
EV. Yeah, that's probably a finance.
Particularly
podcast.
for someone like you that has a very vast portfolio and significant wealth. We've got some.
You got to tax deduct all that rent.
We got. Well, that's it. Yeah, and I got to drive between my 27 townhouses apparently. So we've got a lot going on. KFC's come out with a banh mi.
Yeah, I had to put a photo of that in.
Yeah, it's good.
Look to the show notes. I'm not. Well, I think maybe we should do a taste test just to confirm.
True.
Yeah.
You'd get an actual banh mi versus the KFC one.
It's like GYG is banking on Caesar salad to boost sales that have been struggling, and KFC's banking on a banh mi. Two things that have been around for a long time.
Banh mi's are a very big thing.
Yeah.
Isn't it funny, like when we talk about business here on the podcast, we talk about like BHP mining iron ore, Apple with its iPhones, and like AI from NVIDIA. And then you get some companies that are just like, yeah, we're going to try banh mi. And you just think to yourself,
4 years after they took off.
Is this real? Like, am I living in like a make-believe world? But those businesses are food businesses, right? So, yeah, we'll talk about that. I don't know if you saw this. I should know this because GlobalX sponsors our podcast. But GlobalX announced something this week, which was you can now get options. There are now options contracts over the gold ETF. Have you seen that?
No, I haven't.
Maybe we'll do maybe we'll speak to someone from GlobalX this week, but and come back to you guys next week. But
so you can short gold ETFs?
So that you can now write derivatives over the top of the gold ETF.
On Chi-X?
It's on the ASX.
Oh.
Yeah. So I don't know. Maybe that's something that's going to come to market. I hadn't thought about this. I've seen this globally, but I didn't think that they would do it here in Australia because the options market's not as deep, so to speak. But being able to write options on top of ETFs makes a lot of sense for people that like options. They're better than single stock options. So, yeah, I thought that was interesting. And what else was making news? Yeah, this Macquarie Telecom thing or technology group thing, I was trying to piece it together. So they are launching.
Yeah.
They've just launched.
It's not. It's launched, but it's not fully opened yet.
Massive data center here in Australia for AI compute.
And the only one to go into in Sydney's North Zone. I mean, this is getting very niche. In Sydney's North Zone in 2026 in new AI capacity.
Wow. Okay.
Which doesn't sound like enough.
You know, I went to
because data centers have to be located near the demand for that data, don't they?
Yeah.
That's where, or otherwise you get latency.
You get a lot of latency.
Yeah.
It's interesting because I spoke to the sales team at OpenAI last week. So I've submitted a request to try and get because we're on like the highest tier with ChatGPT, OpenAI. Like I use the developer version of it, not just the chat version. And I was like to them, well, how can I get all my data for our users stored in Australia? And they were like, you need to be on an enterprise plan. And I was like, okay, how much is an enterprise plan? They're like, it's the same price as you're currently paying multiplied by 50 because you need at least 50 users. I'm like, we don't have 50 people and not all of them would use it anyway. Yeah. And it was interesting because I submitted my request, and obviously OpenAI is a huge company now globally. And there's an AI that emailed me and was emailing me.
Yeah.
And then a human jumped in like a day or two later and said, yep, as the AI said, that is correct. I'm like, okay, cool.
Right. Which language seemed more like AI, the human or the AI?
It identified itself as an AI. Like its pronoun was AI. So I knew. But the interesting thing about this is that, and someone that works at OpenAI can correct me on this, but even if you pay for your data and your users' data, so if you have like an app or something, to be stored in Australia, it's only stored at rest in the T's and C's. So what that would mean is when you're doing the logic and the computations and it's passing information through its servers globally, it doesn't stay in Australia. It might zip over to the US or to Asia or to Singapore or something really quickly and then come back to you. And then when it's not computing, it sits in Australia. So as far as I'm aware, there's no way to actually properly control it.
Because they don't have enough computing power or information in Australia to do it.
To do all the algorithm that they need to run for it. So I thought that was really interesting. I think GCP, Google's with the Gemini portal and the Vertex portal, I think you can do all that in Australia. Yeah. Because I think they've got enough compute. Yeah. But we talked about Alphabet last week. Big one. Vertically integrated in AI.
Making its own chips.
Gemini 3. The TPUs. So big beast.
This is like my sector of 2026 almost, I think. Whoa. Data centers.
Sheesh.
I just
give us a forecast.
There was an article.
Doctor.
I'm not going to get the specifics of this right. There was an article last week that was talking about there was a data center that it needed to connect and it needed 400 megawatts, which is massive. That's like hundreds of thousands of homes. But I think whether they'd installed their own battery or they were connected to there's some sort of energy source, but all they could get guaranteed was 300 megawatts. I think 300 megawatts, and the other 100 was more of that flex, if you call it. Yeah. Which, if you're Google or Microsoft, you can't rely on flex. Yeah. And that 100 megawatts of power just disappearing when we have a surge in air conditioners turning on in Sydney. Yeah. And I thought that was super. Like the grid, maybe the grid in America is even better prepared than Australia is, but the grid in Australia isn't prepared for the amount of demand for energy that's coming. And I don't think the country is prepared for the amount of data centers that we're going to need to keep up with what's happening in the US.
Eventually, human beings will just go and just live in a data center.
Maybe we should build a data center.
We'll just like plug in like a surrogate. It's fascinating, isn't it? There was news out about a month ago. I think we may have spoken about it, maybe not on air. Microsoft is signing offtake agreements with nuclear power plants just to have guaranteed capacity. And they're these kind of care and maintenance nuclear plants, they're actually paying to have them restored just so they can plug straight into
before
the data
they
center.
Even have their data center. Yeah. I think it is so, there's so much about, and you got the dual needs here. You've got the expansion of AI, which people, more and more people are using every day. But then you've got cloud, even people still migrating to the cloud, and there's so many businesses still not operating on the cloud. So you've got this dual demand hitting at the same time, and I think they're going to struggle to keep up with supply. Which means you want to have a bet in the camp of the people who are going to build these data centers get paid to do it and get paid a premium.
I'm going to...
As long as they're not fixed price contracts like the old engineering businesses.
Oh, I mean, then you're stuffed. All right, Drew son. So this here, which I'm bringing up now for you and for anyone that's watching, did you know that many electricity providers during the day are now offering free electricity?
Negative pricing, yeah.
Negative pricing, because renewable energy, so if we go, say, instead of the whole, WA is the only one that has its own energy market, FYI for people, but say we go Victoria, because that's the land that we're in right now, you can
I'm
actually...
guessing brown is coal.
Yes, brown is brown coal.
Yeah.
But there's like black coal and all different types of coal, right? But you can see throughout the day, so this is a 7-day chart here. For anyone that's listening, I'll walk you through it. We can see different shade colors for different energy peaks and demands going through, like energy generation, not usage, energy generation. But you can see that coal has kind of got this continuous flow. Wind is the green, and it's kind of picks up where it's obviously on windy days. Solar makes up more than, like, say, 50% during the day.
That's the yellow, yeah.
And the grid actually can't handle now, because I've been talking to some energy market specialists about this. The grid actually can't handle the energy that's coming back to it from these
solar.
Renewable energy sources. So during the day, if you're going to charge your Tesla, everyone, because everyone's going to get a Tesla after hearing the doctor's got one, you can charge it during the day. It's actually cheaper than charging it overnight.
Yeah.
Set your washing machine to go during the day, and you can head to explore
set everything during the day.
.openelectricity.org.au or just the AEMO website, and it will show you peaks and troughs and which states are selling electricity to other ones. And
that's why you want a smart meter.
34% was coming from solar.
Yeah.
Incredible, right? Think about all the bloody people that are like, renewable energy is not going to do anything. Like those bloody...
Well, I'll just say when it gets dark, you got to turn your lights
you got to turn your thing on. But then you
Go
do,
get a
right?
candle.
And that's why that's why we have the batteries and that sort of stuff. But
gas
isn't doing as much these days. Everyone's obviously getting, like, removing gas as much as possible. So Tassie, just classic.
Oh, hydro.
They may vote blue, but they are definitely green in their electricity. It's I think that what we're going to see with all this AI compute is most people are going to be computing with AI, like businesses and all that. They're going to favor some sort of energy mix during the day.
Yeah.
So they're going to say, do the compute during the day, run your agentic models during the day, to try and capture the people that are working and using AI tools.
There's other potential winners in here as well. One of them would be generators.
Yeah.
Like you need backup generators in all these data centers. I found that super, super interesting.
Mm-hmm.
There's a couple of, I know Ausbil have talked about that in the past as well. And then battery, like if you're running a solar farm, you basically need to have a battery.
Yeah.
Otherwise you're just sending electricity that's not going to be used, and the grid's not going to pick up, not going to pay you for the electricity you're sending. Yeah,
definitely. So it's going to be interesting. I don't know, would you invest in an energy retailer or just an energy generator?
No, I think you want the asset. I think you want the grid, the assets in the right way. I mean, listed companies aren't always great for these kind of debt, capital intensive businesses. If they have to keep investing into it, it's bad for rates of return. Yeah.
What about what was that company that what's the company that does all of the gas networks and electricity?
APA.
Are they still listed, or did they get
they're
bought
listed.
out? Didn't they?
Did
they get bought out, or did they get a takeover offer that was blocked? I can't remember. One of them did.
I think Alinta maybe tried to buy them.
Right. Okay. Yeah, I always liked the APA business model, which is APA on the ASX, by the way, people. I remember looking at it in like 2013, 2014. What was it then? $5 a share. It's now $9 a share. So yeah, it's interesting business. Yeah, interesting business.
There's so many overseas. Like you think about Australia is just this like tiny example of what's happening in all the other major countries around the world. Yeah. Particularly US, where it's at a significantly higher level.
So another pro tip for anyone that's buying a Tesla, because it's just a battery on wheels.
Yeah.
The big step that's going to come now is that everyone will be, because it's the best battery that's ever been made.
Yeah.
You'll be able to use it as your house's power.
Yeah, you'll be able to plug it in.
So you'll be able to get the new reverse kind of, I don't know what they call them, inverters.
Oh, so you can drag
So during the day when the energy's free,
yeah,
even if you don't have a solar panel, you can just pull it from the grid. If you have an energy retailer that offers free energy during 12 till 3, I think it is.
Yeah.
You could charge a Tesla fully.
Yeah.
And then at night, or just between 5 and 8 p.m. when it's peak usage, push all the Tesla back in and then
Yeah.
charge it again overnight when
Yeah.
it's free again.
Yeah.
So that's what we're going to move to.
Yeah.
That's
kind of what Octopus was all about too.
Or you could just buy a Prado and just
Well, I was
suck down the diesel.
getting in the car this morning, and there's a guy out in the street. He's like, "Is that a full EV?" to the Prado because it has the EV sign on it.
Oh, is it a hybrid? I didn't know this.
No, it's not a hybrid you can charge. It has two batteries in it. It has a front battery and has a back battery. And I don't actually know how they work properly. I'm going to do some research. One of them I think is for the accessories and one of them is for the starter. So you've got an accessory battery. I think that's lithium. So hence you have to have the EV sign on it just in case there's some sort of fire or they know what to spray on it when the Prado's on fire.
Right.
Yeah.
So did he think you're a bit of a pussy for having an EV badge on your...
I think he was as confused as I am. And then I started and all you could smell was diesel fumes.
Wow. Okay.
I got some bad news for you too. Oh, you
Tell me more. No, you go.
Interest rates. Did you see this?
Yeah, so...
Interest rates are going up.
This
is not a Deremith call yet.
Well, okay, what does the doctor think?
No chance interest rates are going up.
No chance. Well, shit, they're going to go up, everyone. Why would you say that? They could go up.
So we had one hot piece of inflation data. Hot. I think it was like 3.8%. And it was the monthly inflation data. Like the monthly inflation data, I'm like it's like you and me going to the shops and saying, oh, price of strawberries have gone up this month. You're not going to stop people spending immediately by increasing interest rates.
No.
And the global trend is either flat or cutting. It's not. And Australia's, I mean, we seem like we think the RBA is more in control of what happens in the economy than what they actually are.
Yeah. I mean, you could be the RBA and
I think there's a lot of people
hold
still
interest rates
struggling.
on flat, and then some geezer goes and gives everyone a humongous handout and says, don't worry about deposits, anyone.
Yeah, energy supplements. There we go.
Here's an energy supplement. Also, 5% deposits,
Yeah.
not going to have an impact on the market.
Yeah, it'll be fine.
Don't worry about it.
Yeah.
I mean, yeah, fast forward a couple of months. Yeah, house prices went up 200 grand. Don't worry about it.
I just can't see it happening. It's like there's still liquidations. There's still, property developments. There's still like so much. There's a lot of struggle out there still.
Yeah, there is. I think people just seem to assume that the RBA is responsible for all
inflation issues.
Demand inflation, and also like the money printing is like they are solely responsible for that.
And you're probably going to see more layoffs too.
I don't think they are.
Like corporate is laying off. Tech is going to lay off. Like you're seeing trends overseas too. It hasn't been significant yet, but there are people are getting like sacked en masse, not at a reasonable level at the moment. The big banks are cutting. Like there's going to be an impact on inflation, on unemployment.
You know what? The problem people often say with the current market environment that we're in is that if we just stopped immigration,
we'd be fine.
We'd be fine. But the problem if you stop immigration is that you rapidly drive up inflation.
Yeah.
Because we have low unemployment.
Yeah.
If unemployment was high, like as in people looking for jobs, of course we could stop immigration because then we could say everyone that's unemployed can go get those jobs.
Yeah.
But when unemployment is very low, if you then cut immigration, then you're going to have massive wage price increases. Yeah. And people are going to go, wow, I've got 5 job offers. Yeah. 20 grand.
Yeah.
And then what does the employer do? The employer's like, oh shit, we better put up our prices of our products. And instantly you see massive inflation in the system.
So you're either inflating house prices or you're inflating cost of living.
Yeah, exactly. And so we need immigration. The thing that we need to slow down Australia's issues is just more housing supply. That is the one thing that we need.
And more productivity.
Yeah, But what's going to happen, do you think, from AI? I know there's a lot of talk in the US. Like if you switch on Bloomberg, everyone, or read the Financial Times or something like this, every second article is about unemployment, AI disruption.
Yeah.
What do you realistically think?
Actually, there was a pretty good article this week too, which is like now is the time to be going into any series of trades. Like the dollars per week income has improved significantly for trades. Like who's going to build data centers and who's going to connect them? It's experienced electricians and other engineers. And it was like, yes, there's going to be job losses in like probably not losses, but graduates are going to have to be AI they're going to have to be experienced with AI to get roles, or they're going to be easily replaced. There's going to be middle management. Like a lot of these areas are going to struggle in the corporate sector, but in the trade and the physical sector, these jobs aren't disappearing. They're only going to become more valuable. I feel like every time there's a technology shift like this, it shifts employment but it happens over 5 to 10, like over a decade or more.
Yeah.
And it starts to shift.
Yeah, so the thing that Drew is referring to is there was an article out which showed that mining workers take home an average of $3,008 per week.
Yep.
156 grand a year. Sparkies, plumbers, and garbos. Number 2, average weekly cash earnings of $2,351. It's a good bit of coin.
As an average, yeah. Definitely.
Yeah. I mean, yeah. Well, we've always known this. Like for 10 years, we've said that
You've been saying Charlie should do it.
Charlie can be a carpenter if he wants to be. I think he should be.
Yeah.
Yeah. Do you think that for the kids?
I mean, maybe.
Hey, you got some calluses on your hands. That's from driving the Tesla.
No, it's certainly not from hard work.
Drew is just he's just come in the office and he's thinking about what kind of mower he needs. He's on a traditional suburban block, we could say, just to characterize it.
Slight angle, not huge.
Just not huge. Just put down some grass. What should he get? Should he get an electric mower? Or should he just stick with these old gasoline?
Petrol. I really like a petrol, yeah.
Well, here's my tip for everyone, and everyone that is the horticulture, gardeners, whatever, shoot me down. If you're going to go petrol, you have to go with a Honda mower. Yeah. They're the best by far.
There's nothing like that sound when you manage to start a mower first time. Like a petrol mower.
Yeah.
And the neighbours can hear it. And
it's happening. It's a Saturday. Yeah. The sun's out. Everyone's having a good day. Yeah. Someone's going to have a barbie this afternoon. You know what I mean? Yeah.
I reckon I'll end up going electric.
Yeah. Or you could get a 2-banger, like a 2-stroke.
Yeah, but then you have to mix the things. That's really annoying.
Yeah.
It's more like...
They're always really fun though. Yeah. So let Drew know via the link in your show notes, the one that says ask a question, select the Australian Investors Podcast and have a bit of fun with it.
I'm saying no interest rate hike.
Okay, so
this month, and I think not for a few months. I won't say not at all next year. Everyone's heard my call, but not in the first quarter of next year.
If we look at the RBA rate tracker, this is the market's expectations. This was as at market close on the 27th of November. So this was last week. And it shows that the implied yield curve is saying by April 2027, so it's quite a way off, rates will be higher.
By 0.09.
Yeah, not much. In the middle of next year.
So Warren Hogan's an outlier. Yeah.
Yeah, so he's one of I think there's 6% of people that say
dissenter.
That there will be a change, but they're saying decrease the interest rate. 94% of people surveyed, down this end, 94% of people surveyed say that there will be no change to interest rates this side of Christmas, which makes sense.
Yeah.
Probably the thing that they should do is just talk a bigger game.
And they're not going to do it.
We're worried about inflation and we're considering that maybe time soon, maybe we could potentially raise interest rates.
Yeah.
Not in the forecast window because we don't want to have no interest rate increases till 2024 moment.
Yeah. Which is why, this is why we're still comfortable holding.
That's right. We had
Phil Lowe a mix of floating and fixed. Not in his RBA role, but yeah.
Yeah. No. He came on.
So I think you could still be comfortable holding fixed like government bonds, IAF, EBND, getting 4.5. You're actually getting like 4.6% yield now, as well as holding some floating rate because you're not going to see that yield disappear all that quickly.
No. And if inflation does come from the floating rate positions, you will earn more income. What else is making news? What have we got here? So yes, back to the KFC. So Collins Foods, which is the Australian master franchisor. CKF is the ticker symbol. Always a business that surprises me. Drew, there was a bit of a drop.
I think the outlook wasn't as good as what the market was expecting, but delivered record first half revenue, $750 million. And they're looking on a mid to high teens profit increase next year. Like that's pretty solid. If you can, double by 15-16%. Increase by 15-16%. They were up 12% last year, and it's not even off a low base. If you've just done a record year, I guess this is through continued expansion of stores, or almost like a refurbishment. We did go to Red Roost the other day, and we ordered a whole chicken, and they said, "We don't have any chickens.
We only do roosters."
And then they're like, "Oh no, we have chicken." But they're banking, and this is what I find, they're banking on the banh mi. They're saying, and this is when you're such an established brand, how do you find a new source of revenue growth? And this could be relevant for a tech company. It could be relevant for a KFC. It could be relevant for GYG with their Caesar. But you need to find another leg of growth that brings banh mi to the masses. Like you and I have been going down to, Victoria Street or banh mi stand around the corner and buying banh mi for 5 years, 5 or 6 years. So, you used to be able to get them for about $6.
Yeah.
And now the mass market banh mi, and this is what they're hoping will kind of give that little tick up in growth and bring people back to KFC.
It's going to be interesting, isn't it?
Do you reckon it'll be as big as popcorn chicken?
A zinger banh mi.
Yeah, I don't know. It never looks... Is there any photos of what it actually looks like when you get it?
Yeah, Big Mac Res Reality.
Not the puffed up one?
I don't know. Well, someone that's probably listening to the show has tried one of these KFC banh mi's. Mike Kemp, one of the biggest shareholders. Dr. Mike Kemp, who's been on the show before. One of the biggest shareholders in CKFC. Be laughing all the way to the bank. Business has compounded steadily. This shows you the total revenues over time here, Drew. Revenues up from 400 million,
solid business,
2010, over 15 years, now 1.5 billion. Very, very solid. And it's continued to grow, like not every year, but consistently compounded. Pays a really good dividend. Just a good business.
Yeah.
Considering like most of these businesses aren't that good.
Still in that small cap, 1 billion market cap.
Yeah.
150 times PE.
Yep. Could do, because
yeah,
we don't have much growth, consistent growth in Australia, right?
Yeah, exactly.
So it'd be good to see a bit more consistency in the profitability here. But it's good.
You had a similar struggle from Metcash too, so owner of like IGA,
Mitre 10,
all those kind of business lines. They dropped nearly 10%, and theirs was more anemic growth. Revenue was up just 0.1%, so they're getting this war with everyone else. But it's interesting because tobacco sales has been like a bigger impact on the likes of Woolies and Metcash than people really expected. Like the illegal tobacco has pulled. This is a reason why some people don't invest in these companies at all. But illegal tobacco's had a massive hit on their revenue and their revenue growth. It's
crazy, isn't it? People, yeah. Scott Phillips, who I used to work with at the Motley Fool, would always say things like, you have these debt collection style businesses like there's Collection House, Credit Corp, even Cash
Thorn
Converters.
Group was out there.
Thorn Group, those types of businesses, right?
That was a falling knife I caught.
Yeah, but he always made the point that like if you don't have these businesses, what's the alternative? People will then go and get loans from like literal debt collectors. Like where do they get?
Is that the slippery slope argument?
It is a slippery slope argument, but at the same time, you're seeing this now with cigarettes.
Yeah.
Like if you're not, like this is Metcash's revenue over time. If you
so tobacco taxes.
Yeah, like. If you keep pushing, how do you avoid the slippage into like a grey market or a black market for this stuff? And yeah, it's I just find it's quite an interesting challenge for society. But Metcash I like Metcash as a business, but it's got to be cheap for you to buy it, I think.
Because it's anemic.
Yeah, it's a business that is in a very challenging industry. You can see here
12 times PE.
Net profit over time, 283 million in the most recent year.
It's dropped 13% this month. And, PE, that's why you pay everyone, you look at it and go, 12 times PE, that's incredibly cheap. But it's because it's not growing and it still remains cyclical and highly competitive in both Mitre 10 and its IGA markets.
Analyst consensus forecast for 2-year revenue growth, 1.3%.
Yeah.
Which is, so this business should be growing more than inflation.
Yeah.
Because otherwise it's falling behind.
At like 3.
Yeah. It should be growing at inflation, and if it had any pricing power, it'd be growing above inflation. So that's probably a key yardstick. What's the actual dividend yield? 5.6%.
Just after the drop.
Franking credits. Yeah,
and the drop is on outlook, not necessarily on revenue, so the dividend should be supported by the current revenue and profit.
I feel like if you're looking for a dividend play, it could be time to pop it on your watch list. Yeah. Would you rather buy Woolworths, Coles, or Wes Farmers?
I'm more backing in the big behemoth in Woolworths.
Yeah.
Yield isn't as good. Base is better. Incremental change could be better.
Okay, so Woolies out of the top. So Woolies out of the 4?
Yeah.
What's next? Wes Farmers, Metcash, sorry.
Wes Farmers.
Okay.
Maybe on a 12-month view?
12-month view.
Maybe Metcash.
So Woolies, Metcash, Wes Farmers, then what was the other one I mentioned?
Coles.
Yeah.
It just ebbs and flows in groceries. Like you get upgrades, you get more demand, you get a slight, Woolworths really just had the issues with their supply chain last year, where everything shut down. They had like no trucks were moving, and all these things have a little flow on impact.
Okay, interesting. Now we do have some questions from the community. But
We do.
maybe you wanted to ask, maybe pick one of your questions that you wanted to put out there today, and then we'll get to the community questions.
Yeah, it's a pretty difficult one. I got a couple of good ones here. Maybe the first one would be, should retirees ever even bother chasing alpha?
So just like index funds?
Yeah.
Well, you go first. Because you deal with... Well,
you could say it about accumulators as well. I mean, yeah, maybe less so for accumulators. So alpha is the outperformance over the index. You're saying if you buy the S&P 500 IVV, you're guaranteed to get the index return.
Yep.
So should retirees be trying to get better than the index return? I'm like, on a return basis, I see building portfolios for retirees more about the protecting downside and protecting the emotional impact of losing capital. If the GFC hit, I'm not worried about outperforming by 1 or 2%, because if it's -30 and you do -28, you're still down 28%. I'm more worried about, is it possible to limit that experience, to limit the volatility in that experience throughout their retirement, to make sure that they inevitably don't call and say, I want to sell everything because I need to protect what I've got left. We know that point comes at some point for most people.
Okay.
Yeah.
Yep.
Maybe I'll rephrase it. So should accumulators, people under 40, even bother about chasing alpha?
Well, yes.
Not that you don't do with retirees, but...
Yeah, I think so.
Yeah.
I did a video on this yesterday for the Australian Investors podcast that's coming up in January. I think so.
Yeah.
And there's a few reasons for it. One is that even if you don't succeed, at least you discover how investing works and you go a bit deeper. Second of all, we've kind of determined as a zeitgeist that...
That's the first mention this week.
That people seem to think that the best way to invest is to get the optimal outcome based on historical results. So index funds win 50 to 75% of the time, therefore index funds.
Yeah.
Right. But I don't actually think that that's always the best outcome for a society or for an individual. And what I mean by that is, like, say, for example, what did the S&P 500 ETF return last year, Drew?
This year?
Last year.
Previous 17%?
What about the year before that?
10.
Right? So we kind of know, but we kind of don't.
Yeah.
You don't really know. So people, yeah, sure, compounding is important. We've all seen the charts, an extra 1%, blah, blah, blah. But I think that in order for you to learn more and discover the world, I think you should at least try and understand how things make money and what happens. I also think that even if you're a retiree at 65 and you're going to be investing until 85, there are a lot of unknowns with what's going to happen with index funds over the next 20 years, whether that's through extreme concentration, more companies staying private, which we already know is happening. The index is becoming narrower and narrower and narrower. There's so many reasons why you wouldn't go all in on just pure index funds. Maybe you could use rules-based ETFs. But then the other thing is that's become evident to me over my life is that in physics, there's this idea of escape velocity. I don't know if you've heard me say this before, but there's this idea of escape velocity.
This is one of the Rask invest. You talk about it in Rask.
Yeah, I think I may have mentioned this. Yeah, but the idea of escape velocity is this kind of the velocity that you need to achieve to escape Earth's gravitational pull, right?
Yeah.
If you don't find a way as a younger person to achieve escape velocity with your wealth, you're going to get the average results for a very long period of time. And the average results are falling.
Yeah.
So the average stock market returns, it seems that they'll continue to be good, but they are falling.
Yeah.
Right. So if you continue to do the average thing, yes, you're probably going to do all right. 2 ETF portfolios, all that, you're probably going to do all right. But if you want to create real wealth and achieve like escape velocity, like do something extraordinary, you have to do something different.
Yeah, exactly.
Whether it's you use a shitload of leverage, you debt recycle, you take active bets here or there where you think it can work. The good thing about being a younger person, Drew, even if and by that I mean anyone like 55 and under, is that you have time to recover. Yeah, that's you. Yeah. You have time to recover. Like you've got time to make up for mistakes. And I don't think people are going to regret taking a few little bets over their lifetime on what could have been a much bigger return for their retirement or like their kids or whatever. I don't think people are going to regret that.
And I think the key here is chasing alpha can be defined in a whole broad range of ways. It could be holding ETFs, but also holding a direct share portfolio. It could be
Yeah.
holding ETFs and going, I want some, I want US and European. Like all these little things can contribute to chasing alpha and getting a different return to what the average is.
I think the part where people go wrong, and not most financial, but many financial advisors are still doing this, is they still use like insert name fund manager, Australian
funds.
Yeah, big blue chip stock picker. Doesn't work that well.
Yeah.
If you want active positions, go, as we've always said, into the parts of the industry where you're going to get, there's a probability that you'll get excess returns. Small caps, global small caps, private markets, private equity, even bonds to an extent. Use active funds in those ways and get a little bit of alpha. You're statistically more likely to get alpha in those parts of the world. And if you're going to buy individual stocks and you're going to have that in your satellite, don't waste time with mediocre companies that you're going to try and buy and sell. Just buy great companies, watch them go up and down and feel your stomach sink.
And don't sell them like Owen does.
Just hold on to them and see what happens. That's it. Okay, questions. If we do answer your questions on the show, we don't know your needs, goals, or objectives, so be sure to speak to a financial planner before you act on the information. That's in every Rask podcast. If we do mention super funds, if we do talk about ETFs, they have product disclosure statements or PDSs and TMDs that can be found on the provider's website. Special note for super, if we do mention super funds, I don't think we're going to mention them today, but if we do, don't be a dill and change super funds based on low fees or because of the returns of the super fund. Like, you will probably lose your insurance, which you'll never get back. So just really be sensible before you change super funds like whole en masse. It's just crazy to think people do that. Anyway, if you want to send your question in, we love them. So you'll get a free pass to Rask Core, which is our membership service. It's usually, a few $100 over a few months. We'll give it to you for free if you send your question in. We do have plenty of great questions. This first question that we've got here today, Drew, comes from Property Punch Up. They say, my portfolio currently has a 10% allocation to REITs, split evenly between Vanguard Australian Property Securities Index ETF, VAP, as people know it, VAP, and the iShares Core FTSE Global Property Ex-Australia AUD Hedged Close Brackets ETF, ticker symbol GLPR. I'm curious, why do the Rask model portfolios include Charter Whole Long Whale REIT instead of something like VAP or GLPR? What are the benefits of using the CLW REIT? So that's from Property Punch Up. We'll come back to that because there's another question here which Drew will weigh into as well, which is here. All the gear, no idea. Hey guys, never stop the banter, the bets, and the dad jokes. You make finance fun. Well, thanks, All the gear. Following on from Drew's comments in regard to VAP and such a large exposure to Goodman, I'm interested in hearing your thoughts about it as an ETF or pulling it apart, as I quite like Dexus, Charter Hall, Long Whale, and Waypoint. So these questions are kind of the same in that, so at Rask we hold the CLW REIT. We don't own VAP. Probably could have had VAP in the portfolio and done pretty well as well. The problem with VAP is it's incredibly concentrated.
32%. 36%, sorry.
36% in Goodman.
Yeah.
And even the top 10, I have top 5 are just, it's expensive. And you got to know what you're getting.
Westfield in the past too.
Yeah. You got to know what you're getting. This is my perspective, and I'll hear yours, Drew. You got to know what you're getting. With the VAP REIT, what you're getting is a lot of, as Chris Bedingfield said on the show recently, you're getting a lot of property developers, a lot of property exposures that you may not want.
Yeah.
We talked about data centers, but the fact that there's so many people piling into data centers actually makes me think that that's not what I want.
Yeah.
I probably want the other stuff, which is what people are not piling into.
Yeah.
CLW was both cheap on a statistical basis, like it was undervalued according to its assets. It paid a really good yield. It's diversified in over 500 properties.
Yeah.
It's really well run, and I don't have to pay a management fee to an ETF. That was my thesis. Now,
you've got a passive and an active play here. You're saying you're chasing alpha in property. I think if you're only putting one property exposure in, you might use VAP as a starting point because it's a little bit diluted. It does have some bit diversification, but personally, I wouldn't rely only on GMG, on VAP, because you've got 36% in basic logistics and data centers, essentially, and a listed company. It's done exceptionally well over a long period of time.
Yep.
I think this is an area where you can pick the eyes out a little bit because you have tangible assets. This is like where value investing can come to play, where you've got tangible assets. You can actually measure the value of of these companies and have a net tangible asset value that you can compare to the share price. So I like like when you combine VAP and GLPR, if you think about your whole property exposure, you're diluting that Goodman Group a fair bit by holding that, because all the GLPR holdings are really tiny and globally diversified. But we're more likely to, if it's not a smaller portfolio, but just a starting portfolio, you start with VAP, and then you start picking the eyes out of the sectors, because we've had success buying things like Vicinity in the past, buying Rural Funds Group in the past, where you go, here's a sector, the sector looks good, the properties are undervalued, and there's a discount to NTA.
Yep.
It's one of those rare ones where you can find those discounts and have pretty good transparency as well.
Yeah, I like it. Buy the Dip writes in and says, Cbus Super got hit with a massive fine. Who pays the fine? Oh, I was reading about this week. I can't remember what the fine was for.
For serious failures in processing members, death benefits, and insurance claims.
That's what it was for, yeah.
Yeah.
So the company, as in the company that runs the super fund, or their insurance.
Yeah.
So there was another one that happened last year with Australian Super. There was a big fine. So
imposed against the United Super, which is a trustee of Cbus.
Yeah, there you go. So it's the actual kind of the license holder underneath, and they all have their own insurance. Anyone that holds their own license has to have their own insurance. And whether it was negligence or fraud or these types of things, it depends on what's written in that insurance agreement, who pays. It's happened a lot over the last 3 years that these super funds have been fined. It's not, your money is segregated. You can just transfer out at any time you want.
Yeah.
So that's okay.
It's usually has to be paid by the trustee company in this case, doesn't it? Which means, and most of the time the trustee company doesn't have the money to do it. It's got like $1. That's the whole point of having a trustee company.
Yeah.
So they have to do some sort of
insurance.
Yeah, insurance to pay it, or because you can't do a levy to customers to raise money to pay a fine.
That said, Australian Super raised its fees a couple of years ago. A lot of the big industry funds went really low on fees, and then they've all started raising them a little bit.
Yeah.
Interesting for folks that don't understand how super funds make money. There's two ways. There's the admin fee, which is like $2.50 a week or something.
Yeah.
And then there's the investment fees. Historically, all of those investment fees have been the far larger part of the fees that you pay in your super fund, and they've been sent to fund managers. So they might say, if you invest in high growth, it is 0.5% in fees per year. If you invest in balance, it's 0.75% per year. Those fees typically went to the fund managers that invested the money on the super fund's behalf. But increasingly, in the case of Australian Super and more with Host Plus, those super funds are now starting to in-house all of the investment functions. Yeah. So no longer going to the fund managers and say, hey, can you guys manage this amount of money for us? We're going to do it all internally, which one, Drew, lowers fees, but also increases the revenue of the super fund itself.
If you don't, if you don't change your fee, you charge.
Yeah, so they'll be able to earn more money and pay that off. Shift Happens wrote in and said, great question, no name by the way. Is there an ideal time to move it over to a geared fund from a non-geared version? For example, from NDQ to GNDQ. Is there an ideal time, Drew?
I don't think so. Usually not when the market's at an high. But that's kind of arbitrary when the market's at high. What's your objective and what's your time frame?
Yeah.
If you've got a very short time frame, it's really going to be up to you. If you've got a long-term time frame, I don't think it really matters too much about when you're doing it. As long as if you're investing in geared, you really want to be doing that for wealth accumulation over a long period of time.
Yep. Cool. I don't think there is.
No.
I think it's more of a strategic asset allocation.
Yeah.
Actually, speaking of which, I'll probably get questions about this next week or the week after. Inside our Rask Invest platform, all of the custom portfolio holdings have now, the functionality has been added on our side. You can't see it as an investor on the outside because we have to get, we have to just re-release our PDS for Rask Invest. But basically, for folks that don't know, when you invest in Rask Invest, you can choose one of our core portfolios, but now you can also choose to add on satellites. There's a limited number to begin with of satellites, and some of them are the geared funds. So we're saying we're not putting the geared funds in our core portfolios. You can add them at your own discretion.
Yeah.
And we're limiting up to 25% for people to begin with. So you can allocate a portion of your portfolio to satellites, which include the geared funds. But my hope is, I can't control what people do day to day with their satellite portfolios, but my hope would be that when you use this functionality, that if you're going to invest in something, you hold it throughout the market cycle, particularly for geared funds. That's not something that you kind of flip-flop in and out of, in my opinion. There are trading versions of them, but I don't use them, and I don't suggest anyone else use them. We've got time for a couple more questions here. Green wrote in and said, what broker or platform would you recommend to buy international stocks? Merci. Now, we don't recommend anything, so that's important to understand. There are a lot of T's and C's with brokerage platforms and so on and so forth. I don't know. How would you want to answer this? What do you use?
I mean, we tend to put it with everything else. We don't have an international and it's domestic separate. We use a super platform or an investment platform.
Like a Net Wealth or a Hub or Macquarie or something like that.
Yeah, exactly. We use one of those for clients because they're advisor initiated. They have really good brokerage at a higher scale. But I think the only thing, and you're probably going to state this anyway, is that make sure that when you're buying shares via an international platform, there's probably 5 good platforms around there that you own. You are the registered entity that owns the shares in those accounts. They're not being pooled with someone else.
Yeah. It's hard to do that with a lot of them because you just don't know. I used to use Charles Schwab, which was probably the best for that. Yeah. A lot of people use interactive brokers in our community. Yeah. I just use Perla for small like brain farts that I have.
ComSec still lets you do it. ComSec still let you do it. It's just not. It's just a bit clunky.
Well, hundreds of thousands of people use Stake, I believe.
Yeah.
So they all have their pros and cons. One of the things you just got to be mindful of, in addition to what Drew said about the custody, they all have to have reinsurance in the US. So they have to have enough insurance to cover them. So in Australia, we have the HIN-based model, whereas over there, they don't have that. And they use a custodial model where your shares are held hopefully in segregated accounts at the custodian. So that Drew owns Apple, Owen owns Apple. It's all registered by the custodian. But then the custodians have their own insurance that goes above the regulated minimum. Yeah. So hopefully that's in place for your broker. If you don't understand it, don't use it, is probably my quick one. Just quickly on this though, the other way that international brokers can get you in terms of the fees is through the currency exchange. So it's not just the brokerage fee, but it's actually the process of how do they convert your Australian pesos to US dollars. That can cost you significant amounts, like 70 basis points in some examples. Yeah. Final question is from, we've got a lot of questions, but final question is from Justin. Hey Owen, in 2022, you interviewed Wayne Hooper from LaserBond. Given the recent transition to a new CEO and the vastly expanded business model since that time, do you think you could try and get the new CEO on for an interview? Also keen to hear your thoughts of how this business is progressing now. That's fantastic, Justin. I'll actually do a bit of a write-up on that. If you're on the Rask mailing list, check that out. We did have Wayne Hooper on the show. Family business is LaserBond. It does cladding and engineering based out of Sydney at Smeaton Grange, but they have now facilities across the country and they license their technology in a small way. It's a really interesting business. I often thought, Drew, if I was to get $10 million into my bank account right now, right? $10 million, what would I do with it? For me, I would probably do like the sensible thing. I'd probably use I would use our 50-50 portfolio. I just put the vast majority in that. Buy a 50-foot boat or something. I'd probably buy a bigger house with no mortgage, then max out the mortgage, like redraw, and then use that to buy more shares. Yeah. That's 100% what I'd do. I'd get how much of a loan can you give me? And I'll just put that into something like Terra, which is our 50-50 strategy. But then I think, once you get to a certain point, like what do you want to do strategically with money? 10 mil's enough where you can be like, you can go around and find some of these small caps and be like, I'm going to take a serious position in this. Yeah. LaserBond is one that would be in my top 10 to go and research first.
Is that a good month?
Has it? I haven't checked the last month.
Had a big jump, 53, up 25% this month.
Oh shit, maybe my $10 million players.
I
was looking at it at like 40 cents million. And now it's 66 cents. So the challenge that LaserBond has always had through time comes back to what we talked about at the top of the show. Employment. Yeah. They just can't find enough engineering talent, enough people to work in their facilities and their factories and stuff.
And pay enough.
Yeah, they just can't find them. They have to have their own apprenticeship programs, their own everything program, because they just can't find enough people. And that's what's always slowed them down. But it's actually a wonderful business. 77 mil market cap, dividend yield of 2% according to Google Finance the Honourable, PE ratio of 20. I actually think it's a great little business. It's a traditional business. You're not going to get SaaS technology, AI-like returns. And if you expect that, you'll be in for a bit of a rude awakening. But incredibly illiquid. The Hooper family still owns a lot of the stock. So yeah, I'll try and get the new CEO, and that's a great idea. Thank you, Justin. All right, guys. We've had some great questions come in today. I would love to hear more. If you did get your question on the show today, be sure to write in because we'll give you a free pass to Rask Core over Christmas. We've got personas, which are like kind of like
Case
financial
studies.
Yeah, like case studies. I don't want to say financial plans, but I did. They're kind of like case studies of people that we then get our financial advisors to do the recommendations for, and you can read through and see what the advisors would recommend based on the case studies. We've got more stock research coming, so go and check that out. You'll get it for free if you write in a question. Drew, you can get in contact with at wattlepartners.com.au, or you can email Mr. Andrew Deremith at... No, you can't.
RBA.gov.au.
Yeah. So, Drew at rba.gov.au. He's going to get the new job when it comes up because he's got some views. Let us know what you think about the call on interest rates. I think interest rates are going to stay flat for a while.
Sounds good.
Yeah? You need to give us a dad joke, Drew.
I used to play piano by ear.
Okay.
Now I use my hands.
Wow. That's actually pretty good. That's pretty good.
There we go.
Final update before we sail off into the sunset.
Oh, yes.
And you have a great weekend.
Talk about sailing into the sunset.
The 2025 portfolio challenge, where we each got 10,000 fake dollars in an Navexa account to track 10 positions. The community portfolio is up 12.16%. Good on your community. With ASML up 52%. Good on your KKR still plunging to new lows. This is the best one. Named by Monique is my portfolio, and it is not the best one. 13.8% in the green. What's weighing me down? Home Depot. XRF Scientific is retreated as well. The Everything portfolio, named after the master food seasoning that Drew puts on his eggs just before he cracks out his electric lawnmower, is up 15.27%.
There we go.
Here
Cruising in. And you know Tesla always has a great December.
Well, when Drew starts saying he's going to buy one. Tesla is actually back at break even for you, Drew. So
remember this time last year it had a massive run in December.
Nvidia's doing well. QRE. Your swing trade on QRE.
Resources, yeah.
Resources. Well done, sir. Thanks for listening to this episode of the Australian Investors Podcast. We'll be back next week. Keep sending in your questions. We still have to tell you about this upcoming game. That will all be announced in the next 2 weeks, and it's going to be fun. So stay tuned. Thanks for listening. Thanks for watching. Drew, as always, thanks for joining me.
Good to see you.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.